Thank you so much once again for joining our today's webinar. My name is Betty Simiu, and I want to officially welcome you into our today's engagement, or rather capacity building through webinar. Today is just a continuation of what we started previous 2 weeks ago on school taxation, on matters to do with taxation, and what we expect come January 1st, 2024, in line with the proposed changes in matters to do with tax. So without any further ado, and in the interest of time, I want to welcome our today's presenter, who is none other than Robert Wariru, FCPAK from Ichban. And he will continue with what, of course, we learned during our previous engagement. And I want to let you know that this webinar is being recorded, and the same will be shared in our social media platform. So once again, karibuni sana, and over to you, Robert Wariru.
Thank you very much, Betty, and good morning. Please confirm that you can hear me.
Absolutely, we can hear you, Robert.
Excellent. I'll just put on my video very, very briefly so that, and I'm sorry, the lighting is very bad, but that's me so that people can see me, who is talking, so that they don't wonder who is this, who is talking to us, and we don't know who he is. So that's just me, and I just wanted to put that for the benefit of our viewers and our listeners. Let me just upload my presentation. Excellent. Betty, just confirm that you can see my screen.
Yes, we can see us.
Right. Thank you very much. And ladies and gentlemen, always a pleasure engaging with you. I think one of the things that we can all agree is that in this life, nothing is certain other than taxes and death. And because we are not speaking about death, today we'll be speaking about taxes. And like Betty said, about 2 weeks ago, we had a session where we went through the effective changes and the critical ones. Just by way of summary, is the fact that all businesses, it doesn't matter what you do, whether you are selling milk, whether you're running a school, whether you're running a kiosk, all businesses are required to issue TIMS compliant invoices. And that is such a critical issue for 2 reasons. One, it is a legal requirement, and if you do not do that, then there's a penalty of twice the amount that is involved. So that, for example, if you are required to charge or to pay income tax and you don't, then your penalty is twice the amount that you should have paid. That's number one. But more importantly, in our view, is that when you're transacting with other people, those other people will not be able to take a deduction of that expense if you don't give them an invoice. And remember, we went through the example of a company which is paying for its employees education for their children. Now, for the company to take a deduction of that expense, it needs you as the owner of the school to issue an invoice which is TIMS compliant, a fee invoice which is TIMS compliant. And it doesn't matter that you're not registered for VAT, because there was this confusion about it is only people who are registered for VAT who should issue TIMS compliant invoices. No, everybody is now required by law to issue those TIMS invoices, and come 1st of January 2024, that will be a strict requirement. Now, having said that, we thought about what are the critical issues that we often encounter whenever we have Kenya Revenue Authority audits. And this is the reason why today's session is about managing Kenya Revenue Authority audits, because some of you may already have been audited, some of you may be audited, and based on what we are seeing, it's very, very likely that a lot of you will come under the taxman's radar, especially as they try to enforce the TIMS compliance, TIMS invoice compliance. So I guess the first thing that you need to understand as a taxpayer is that you need to, I'm trying to move this, yeah. So the first thing that you need to understand as a taxpayer is that you have a relationship with Kenya Revenue Authority. That's the reason why you have a PIN, whether you're an individual, whether you're a company, whether you're running your school as a partnership, you have a relationship with Revenue Authority. And your critical framework of engaging with Revenue Authority is through iTax, which is the system that Revenue Authority uses and allows taxpayers to file their returns to even get messages. A lot of us don't even go to our message box on iTax, but there is actually a message, and it's so important to look at that, because when they issue an assessment, you will get that message through the registered email, and it also feature on your iTax profile. And then on that iTax profile, you'll be able to see your ledgers, and the most important one here is your general ledger, which shows you your status from a tax perspective, how much you paid, how much, what you have filed, what is outstanding, what are the penalties, and what are the interests. That is so important because there is currently an amnesty, and it's important that you try and take advantage of that amnesty in respect of any penalties that may have accrued, that so that Revenue Authority can waive that, because effective 1st July 2023, there is no more waiver of penalties and interest. So that's your iTax profile. Now, if you look at your PIN, it will also give you your tax obligations, which is essentially what Revenue Authority expects you to account for. Typically, you will have your income tax, especially if you're a company. You will have, or even an individual, you'll have PAYE if you've got employees. That's pay as you earn. And under income tax as well, you may be required to account for withholding tax. And this arises where, for example, you take your school bus to the garage, and you get an invoice from the garage, and the labor for that those repairs is, say, 30,000 shillings. You are required to withhold 5%. So that withholding tax obligation is under income tax. You may also have some of you, depending on the lines of business you run, you may have VAT obligations. And for example, if you've got a school hall, or you're hiring a school bus, and you are the revenue from that line of business is significant, then it means that you should be accounting for VAT if it's more than 5 million shillings a year. So you may have that VAT obligation. So your tax certificate or your tax registration certificate will give you your tax obligations. Now, an important one is where is your tax office, what we call the tax station or tax service office, TSO. This is where your account is domiciled, or where it's located, so that if you're in Naivasha, for example, then you go to KRA Naivasha. If you're in Nakuru, you go to KRA Nakuru. If you're in Moranga, you go to KRA Moranga, and so on and so forth. So that is where you shall be dealing with your issues. KRA is moving to what they're calling the next generation tax management system, or tax revenue management system terms. And under that next generation, which is likely to come in 2025, it doesn't matter where your account is. You can walk into any KRA office and get assistance. So that's where we're headed. But currently, you are domiciled in a specific tax station, and that's where your relationship manager sits in. And it's so important to know who your relationship manager is, because that's a person who can help you resolve any issues that you come across. Some of you may be engaged in businesses that you're required to submit tax compliance certificates, for example, for licensing and so on and so forth. So again, it's important that you manage your relationship with Revenue Authority so that you can get that tax compliance certificate. It is also good for you to just know that there is nothing that will come at you from the dark. You know your obligations. And then we've talked about the onboarding of e-Teams, which is the electronic tax invoice management system, which is now a legal requirement. All of you have to do that. And I hope many of you, or if not all of you, have already done that, because we are running out of time. The deadline for issuing those invoices is 1st January 2024. Right. So how do you go about managing the KRA audits? Because KRA will definitely come for you. The first thing is we need to look at what would trigger Revenue Authority to come and review your books. The first thing is Revenue Authority will look at consistency in terms of your payments and tax remittances. Some of you may have already received emails from Revenue Authority telling you, we noticed last month you paid PAYE of 90,000, but this month you've paid PAYE of 50,000. Please explain the difference. So KRA is basically looking at the trend and saying, why is your PAYE going lower? If it's going higher, they are not really interested. They don't generally look at that, but typically it will be that. Another issue about consistency in terms of remittances is where you're not paying. You're filing, but you're not paying. So KRA will want to find out why you filing the returns but not paying. This is the reason why you need to have a good relationship with your relationship manager, because you can be able to explain some of these things. The other one is they look at the industry and they say, well, from the educational sector, which is what we're focusing on here, we can see that this is generally how much people are paying. So, private schools of this caliber, or, this is the school fee structure. So this is how much they are paying, whether it's PAYE, paying their employees, whether it's income tax based on the profit that they are making. This is what they are paying. So how come you are an outlier? Again, that is an issue of looking at the trend and the just average statistical average of the sector. That's what we're calling industry statistics. Sometimes Revenue Authority may also commence an audit where they have information. Somebody has given information to Revenue Authority, what we call whistleblowing, and said XYZ is not paying taxes. We know that they are paying employees, but they give them envelopes at the end of the month. They don't pay PAYE. So with that kind of information, then the intelligence team at Revenue Authority will trigger an audit to just come and confirm that. Now, the point there to note is that there would be an incentive for anybody to whistleblow, because it's a significant amount of money. I believe KRA pays 5% of the tax collected. So you can see it's a significant amount of money. In Uganda, they pay just about 2.5%. Kenya is quite high. So that's another trigger of an audit. Sometimes, depending on the sector, they may decide this sector is so unique, we don't understand it. So let's take a case study and go and study it, or audit it properly, so that we can understand what the risks are, what the issues are, where the tax yield is possibly going to come from. So we have seen those kind of things. And for example, we know they did that in the shipping industry. We know they did that in the betting industry. We know they have done that in the agricultural sector as well. So even in the educational sector, I wouldn't be surprised if some of you are, especially the bigger names, if you are selected for an audit based on that profile, so that the carrier can understand the sector dynamics. Now, the other audit triggers include reconciliation problems. And this is where for example, your returns, whether they are VAT returns or they are PAYE returns, they don't tally with your financial statements. So your auditor has prepared accounts and you're saying, we have sales of, say, for VAT purposes, we have sales of 6 million. But then now your financial statements show 8 million, or they show 4 million. Somebody will say, but what is this variance? So let's go and find out. So it's so important to ensure that when you're doing your audit, please get these items reconciled. Your turnover to financial statements, your PAYE returns, because sometimes for PAYE, you go to the financial statements and you see employee costs, 7 million. But then when you go to the VAT, to the PAYE returns, total employee costs per PAYE returns is 5 million. So somebody will ask, but what is the difference? It means that there's an expense, somebody was paid, but PAYE was not paid on that difference. So it's important to have a look at those reconciling items. And then Revenue Authority, as a standard procedure, now they're asking for your bank statements. Let's see your bank statements. Let's see the income that has come in. It's so important to be doing your bank reconciliation, so that you can explain the numbers that are present in your bank statement but are not in your income statement. So, for example, recently we had a case where one of our clients got about 200 million in their bank statement, but KRA came and said, we think that you should have been paying tax on this amount. And we said, no, this is capital that has been injected by the investors. It's not income. So you are able to explain those entries in your bank statement. So it's very, very important to do those reconciliations. And then lastly, they look at your standard of living as an individual and they say, now this person, their children are going to X school, they go on holiday. You guys, you post on LinkedIn and on Instagram and everywhere else where you have been. Maybe you've been to the Maldives or whatever. You've been to Mombasa, to South Africa. So they look at that and they say, but how is this person managing this kind of lifestyle based on this income that they have disclosed? So that standard of living is very, very critical. And remember, today you cannot buy land without a PIN. You will not buy a vehicle without a PIN. You'll probably not be able to install electricity without a PIN, and so on and so forth. So the KRA is able to pick all these data points and do an analysis and say, we want to go and have a look at Robert and see what the problem is. Now, you've been selected for an audit. What do you need to do? The first thing is you get the KRA to give you a letter, because that letter will give you very, very important details around the exercise. So the first one is, what period are we covering? KRA may come and tell you, we want to cover 2016, for example, and you tell them, no, you cannot cover 2016 because that is beyond 5 years. Under the law, you're not allowed to audit me beyond 5 years. So it's so important that that letter is clear on the period that is being reviewed. When do they expect to start it? Because it may not be convenient for you, and you are allowed to actually say it's not convenient and reschedule it. What documentation do you require, or does KRA require? Some documentation you may not have. You may need to go to the bank to get your bank statements. What taxes are you covering? You say you want to audit me for VAT. No, but I'm not registered for VAT. Why would you be even looking for VAT? So it's so important to have a look at what scope is covered. And then who is the contact person? Because you need to know the contact person so that you're able to manage the audit as you go along. And then that letter will tell you who is going to be your contact person for purposes of that audit. Now, on your end, once you get that letter, the first thing you do is, because the law allows KRA to actually do an audit, and they can request for any documentation from you as a taxpayer, including they can go to the bank to take copies of your bank statements if necessary. So the first thing you need to do as a taxpayer is ensure that you've got your documentation ready and it's up to date. So if they've asked for audited financial statements for the year 2022, give them the audited financial statements, which means that you must have gotten them audited. You must have filed your tax returns as well. Make sure that they're up to date. We normally recommend that before you invite KRA, you understand your problems and assess where your likely challenges are going to come from. It's almost like when you're going to the doctor. Before you get to the doctor, you already know, I have my eye is paining. I cannot see very well. So you're going to tell the doctor your symptoms. So you need to understand. You need to understand what your risks are. You have conducted a self-review so that you understand where your likely issues are going to come from. And that also helps in terms of identifying the problems and generating possible explanations for some of those problems, because you may have a legitimate reason, or maybe somebody who has got the history of the transaction can be able to tell you that. So it's very, very important to undertake that self-review, what we call a tax health check review. And that's what we're saying up there. Once you do that, then you know your exposure areas before KRA come in, and you are ready for them. We are not saying that you tell them, and please don't give them that report or findings, but just understand what those problems are. Because of course, if you give them, then that will be an admission on your part. Now, so you've gotten the letter, you've gotten the documentation ready. So how do you now deal with the audit? Because they will tell you we're coming on X date and we'll be 4 people. So give them a room. Just these guys are human. Treat them just like you would treat any person. I know in the Bible they say that tax collectors were hated, and even Jesus himself had to defend the tax collectors. Nobody likes tax collectors. So just be nice to them, because sometimes in our experience, being nice to these guys can actually get you off the hook on some routine and compliance issues. I remember one of our clients some time ago. They were audited. They were siagaring maize. They were maize millers, and they took the KRA guys and put them inside the mill. So in the morning, the ladies come with their very nice hair. They are put in that mill. By the time they are leaving, they need to go to the salon because they look like they have aged. They have got white all over their hair. So you can imagine what those people think about that taxpayer and how they are going to treat that taxpayer. So just be nice to them. Give them tea. If you have tea, no problem. Just give them tea. We're not saying that you treat them like kings, but just be nice to them. And then on your end, lie as a person who is going to be dealing with KRA. Let not KRA deal with everybody in the school or in the organization. And this is so important because KRA guys are quite cheeky. They will go to get water. They meet the accountant. They ask them, "Oh, so how do you guys operate? So, for example, are you guys given telephone benefits?" And the accountant, just says, "Yeah, we're given a telephone benefit," but probably that's not the case. So it becomes very difficult to backtrack from that. So have one contact person who is going to be liaising with the Revenue Authority. Then before you give the documentation to Revenue Authority, please ensure you review it, because once you give it to them, it's difficult to retract. It's they'll say, "But we got this information from you. It's your information. You're the one who has got the information. You're the one who's providing to us." And then when they ask queries, respond to them. We prefer and we recommend that you respond in a documented fashion so that it's very clear what you're saying and there's no room for being misquoted or being misunderstood. Where you don't have the answer to a question, it is okay to say that you're going to look into it and will respond to Revenue Authority, and you don't even have to give them a timeline. Then you can consult your accountant, you can consult your tax advisor or your auditor. So, but just ensure that you are responding to queries that have been asked, and only questions that have been asked. Don't go giving them stories. I remember once we were doing a review for KRA, and the equipment that was qualifying for tax deduction needed to be new, and in our case, the client had refurbished the equipment, and nobody had asked that question about whether it's refurbished or not. But somebody just went and said, "Yeah, this equipment came from India. It was refurbished." And we had a really hard time explaining the refurbishment because it was just a small component that had been refurbished. And that's the only thing that we probably would not have qualified. But we had such a hard time because of giving or volunteering information which is unnecessary or you had not been asked for. Then, just supply the information requested in terms of scope and period, because that's what they are reviewing. Just give them what they have asked for, because they'll usually give you a list of required information. Give them that, no more, no less. Usually organize for update meetings with Revenue Authority, where you're saying, this is where we are, this is what we've given you, what are your preliminary findings, so that you can start dealing with some of these findings, then at least you know where this is going. Sometimes they'll tell you, oh, yeah, we have not found anything significant, which is quite good for you. But just try to talk to them regularly so that you can understand where they are going with this. And you're able to move them away from dangerous territory. If you think that there's a big issue somewhere, at least you are able to ascertain that they're going to come to that, and you try and shepherd them away from that. Then we talked about being cooperative. Just be nice to these guys. They don't bite. But sometimes when you mistreat them, they can also be very, very vicious. And key is the last point there, which is about resolving issues as they arise. You see, you don't wait until the end when KRA comes out of the field and they have given you a letter. Once it's in black and white, it becomes very difficult to remove it. But before they put it in writing, have a conversation, agree what are the issues, explain yourself, and hear what they have to say. Because even in hearing what they have to say, you probably will identify a potential defense that you can use even in the event that it's still a disputed issue. So try and resolve those issues as early as possible. So what are the do's of an audit? So there are the do's and the don'ts. So what are the do's? Obviously, cooperate with Revenue Authority, which is quite critical. You want them out of your hair as soon as possible. So just try and facilitate them in terms of the documentation and information and clarifications that they require by providing the necessary information. If you think that it's a critical or it's a complex issue that is arising, engage a tax agent. A tax agent may cost you, but they may end up saving you a lot of trouble, especially if there are going to be assessments down the line. You can try and avoid that. So we usually recommend engage your tax agent or your auditor who can assist you with that. And of course, you understand your potential risks because then you can better anticipate what you're going to say about that. Prepare because you'll be given a notice for the audit. So prepare well in advance and gather all the information so that you can get them out as soon as possible when they're there. Now, on that point of preparing for the audit in advance, KRA will normally tell you we are coming. They give you 14 days. Maybe that's not sufficient. Tell them that's not sufficient and recommend and propose another date when they can come. So that you're able to gather that information. So that's critical for you when you're doing an audit. Now, for sure, the things that you must not do is that don't conceal information from Revenue Authority, especially if it's in your financials. Some things are in your financials and they're not necessarily well explained. It's okay, that's fine. But when you're trying to hide things, it can be very dangerous because KRA and generally a good auditor will be able to counter check using different sources, whether it's your bank statements, whether it's your employees, third-party data for your suppliers, and so on and so forth. So it's important not to conceal information, because when you conceal information, number one, it's an offense under the Tax Procedures Act, and two, more importantly, is that your case may turn into a fraud case. And the problem, ladies and gentlemen, of a fraud case is that audit period is not limited to 5 years. They can go back to 1963 if they want, just because of the suspicion of fraud. So it's so important not to conceal any information. We're not saying that you volunteer any information, ask to be asked, but wait to be asked rather, but don't conceal the information. Don't deny access to revenue authority, because that is just raising a red flag and saying I have got something to hide. Bank statements, for example, they'll ask you for the director's bank statements. You see, if you don't give them, they can go to the bank and they will get them. Now you can imagine if they go to all that trouble of going to the bank and photocopying those bank statements. You can imagine how they will treat you when they get to you. So if you've got the information, give it to them, or give them samples. You can negotiate to give them samples. You don't have to give everything, but don't deny access to revenue authority. Of course, don't falsify any records, because that becomes a fraud issue as well. If there's a recorded, especially something that has been filed already, don't falsify it, because then that becomes a fraud issue. And lastly, we strictly advise our clients that KRA sometimes some crooked officers will come and say, if you give me your tax bill is 3 million, if you give me 1 million, this thing will go away. Well, you could do that depending on how you view this business. But our view is that it never pays off. Why? Number one, the minute you have a tax bill, if it's in the system, nobody will get it out of the system, because the system has got an audit trail. It will be able to tell that Robert entered into Betty's iTax ledger at this time, and this is the log of what Robert did. So nobody will be able to remove that from the system without an audit trail, without leaving an audit trail, which means that essentially nobody will be able to remove it for you. So that's important. Number two, in our experience, what we have seen is that you will give person X the 1 million, then you stay for a year, it's a different person Y from Kenya Revenue Authority comes for the same issue. You give them another 1 million. Then after 2 years, person W comes from Revenue Authority, giving them another 1 million. Now, surely, you might as well have just paid the 3 million and forgotten about it, because if you don't give this third person the 1 million, they will still give you the assessment for the 3 million, and there's nothing you're going to do about it. So, in our view, trying to cut those deals generally is not helpful from a tax resolution perspective. Now, once you've gotten through the audit, Revenue Authority will give you a demand letter. But if you manage it properly, before they give you the tax demand letter, they should give you a letter of preliminary findings, which is basically telling you these are our findings on a preliminary basis. Come in for a discussion. So we have not yet demanded, or we've not assessed. But if they demand, then now you'll need to have a look at that demand and respond to that demand. Now, it's so important that you respond to that demand comprehensively and with evidence to back it up. Why am I saying comprehensively? Because once you respond to that, a demand is essentially an assessment. Kenya Revenue Authority is assessing you. So you need to object to that assessment. And the problem of not putting in a solid objection is that the grounds that you state in your objection are what you are limited to, even if you go to the High Court or the Court of Appeal. So it's important to respond comprehensively to everything that the Revenue Authority is giving you, is saying, and try and demolish their case. Remember, once the commissioner gives you an assessment or a demand letter, then the obligation or the onus to disprove that comes to you. And it's now upon you to say, to prove to the tribunal, to prove to the High Court, to the Court of Appeal, that the commissioner is wrong. So it's important for you to do that comprehensively. So we recommend that you discuss with your advisor on how to respond to that and ensure that is put in within the required time, because you need to put it in within 30 days. Ladies and gentlemen, let me repeat that. If you do not object to a demand within 30 days, you're deemed to have accepted it, and there is nothing you can do about it. Of course, you can say you can file a late objection, but the way KRA is going, it becomes a bit difficult to get out of that. Then the other thing that you need to do when you get that tax demand is confirm that the computations are correct. I mean, these guys are human; they are prone to error, so they may have computed wrongly, maybe not applied the tax on a number, or applied the wrong rate of tax, especially if it's withholding tax. So just confirm that those computations are correct. And then if there's any tax that is not in dispute, pay it, because actually the law requires you to pay. Before your objection, you can object to a demand. If there's any considered tax or tax that is not in dispute, you must pay it for your objection to be valid. And it's very critical that you do that. Of course, you can say everything is in dispute, in which case there's no tax that is not in dispute, and therefore you have nothing to pay. And then before, we normally recommend that before you respond to KRA, meet them to discuss and understand where they're coming from, so that you can better understand how to frame your response. So meet KRA to discuss and evaluate your next options, whether they be going to the tax appeals tribunal or not. So that's tax demand and assessment. Sometimes KRA, depending on who you're dealing with, the demand letter will say, treat this as an assessment. In other instances, they'll say this is just a demand, in which case, probably not an assessment, because the law requires them to say, to clearly specify that it's an assessment. Now, once they issue the assessment, you've got 30 days to object to that assessment. And that's the objection that we're saying has to be so solid and so comprehensive in your return, because what you argue in that assessment, the objection, is you will argue that throughout the entire dispute. You're not allowed to bring in additional grounds. So that's why we're saying state precisely the grounds of objection. You have found that I paid withholding, I paid this person legal fees, and I should have withheld. And we disagree because, this is an example I'm giving, we disagree with your position because actually what I paid the lawyer was stamp duty to assist me in getting, to assist me in buying the land on which we are constructing the expanded school, maybe junior secondary. So stamp duty is not subject to withholding tax, those kind of things. So that you need to be very, very clear why you're objecting to that. And then once you file that objection, the commissioner has got 60 days to either accept or decline. So they may say, we have looked at your objection, we agree with you, and therefore we have vacated the assessment, or we disagree and we have confirmed the assessment. Once they confirm the assessment, then you have for 30 days to appeal to the tax appeals tribunal. So again, now at this point, we definitely would advise that you talk to a tax advisor, because it's a bit technical, and appearing before the tribunal and documenting that paperwork can be a bit of a challenge. So you've got 30 days within which to file your notice of appeal against the commissioner's objection decision, and then 14 days after filing the notice of appeal, you file your appeal bundle, what we call the memorandum of appeal, and the statement of facts, again outlining your case. So that's what we've just been talking about. 14 days after the notice of appeal, you file the memorandum of appeal and statement of facts, which includes the KRA decision. So again, it bears repeating that your appeal is limited to the grounds that is set out in the appeal and the arguments that you had put in your objection decision. You're not allowed to bring in additional documentation because the tribunal has ruled, why didn't you give this information in the first place during the audit? Why are you bringing it now when the commissioner has made a decision? So it's so important that you put in a comprehensive one. Then once you file, please make sure that you file you serve Kenya Revenue Authority, the Commissioner of Legal Services and Board Coordination, with that notice of appeal and the memorandum of appeal within 2 days of filing them. So you've got 2 days after you file them to serve them on the commissioner. Usually it's easier to just file and serve on the same day. And then once they KRA receives the memorandum of appeal, they've got 30 days to file their own response to that submission to the tribunal. And then now the tribunal will list the matter for hearing, and you will go to be heard, and the tribunal will give you a decision. When after the audit is done, you'll obviously be told your risk areas, or you'll have highlighted your risk areas, which is good for you, because then you then learn those areas and put in place measures to mitigate the tax risks. You may want to have a consultant help you in terms of those reviews and just the procedures that you need to put in place. For example, if you're making a payment, then payment vouchers, which will be accompanied for approval, and so on and so forth. again, just conducting staff training or capacity building so that you manage the risks and the penalties, especially. And when you're not clear on anything, consult. Call your auditor, call your accountant, call your tax advisor, we're happy to even just offer very high level advice on any issues, especially that are not clear. Now, once you go to the tax appeals tribunal, there is actually an opportunity to try and resolve it without going to the court, and that's what we call the alternative dispute resolution, or ADR. So usually what happens is that as a taxpayer, you will say, I'm interested in ADR. So you file an ADR application, and then KRA will identify a team which is independent from the audit, and you'll come and say, let's discuss and see whether we can resolve this issue without going to the tribunal. So essentially that is it. It's where the facilitator from KRA brings together the taxpayer and the assessing team to try and reconcile them and resolve the issues. So it's not really an arbitration, but it's like mediated settlement. In fact, they call themselves mediators. So that's an option that is open to you. And usually we recommend that because it's faster, it's cheaper, and you get to resolve your issues much sooner. And Revenue Authority is both parties are satisfied. But still, nothing stops you from proceeding with the tribunal or even going to the High Court or the Court of Appeal if you're not able to resolve it. So, like we're saying there, ADR really is just a means for KRA and the taxpayer to find a middle ground on an issue and resolve that issue. So it's still an option for you. Those are the benefits: expedited resolution, lower costs. It improves your relationship with Revenue Authority because you're no longer fighting as much, and also because it's done between you as a taxpayer and KRA, nobody else gets to know that. But you see, in tribunal and court, I can actually go to listen to anybody's case in the tribunal because it's a public hearing. So that's what we're saying there about confidentiality, away from the glare of the public and business competitors. What are the additional benefits and what is appropriate for ADR is where both parties are willing to concede something. So you're looking for a win-win proposition here, and where there are complex facts or issues that are being discussed. Because if it's straightforward, then KRA will tell you, no, this thing has been ruled on, and we're not willing to dispute it or to go into ADR. And that's what you're saying here. Cases not appropriate for ADR, where there is you don't have evidence, you can't demonstrate your position, where there is fraud or tax evasion. That one they generally not agree, or where the law has already been ruled on in the High Court or the Court of Appeal. So, for example, for withholding tax, it's very clear that withholding tax is due on recognizing the expense, whether you have paid it or not. So that one, KRA will tell you the Court of Appeal has ruled, and we are not even discussing it. And that's what we're talking about here: disputes which have been settled and will be against the law. Or where KRA says we have taken an industry position on this issue, and we are waiting for the court to give us determination. So that one, we are not willing to go for ADR. So those are the instances where you cannot go for ADR. So, ladies and gentlemen, that gives us an overview of how you would manage a Revenue Authority audit. It's a scary concept, or it's a scary thing to go through in the initial stages. But once you've been through it, you will realize that it's something that you can survive, and you will learn a lot, and that will help your businesses to be more compliant, and everybody can sleep happier. So allow me to stop there, and perhaps hand it back to Betty. I know we don't have too much time, Betty, but allow me to hand it back to you. Thank you.
Okay. Yeah, thank you so much. Thank you so much for that, of course, elaborate training on matters with KRA audits. And one highlight is that just comply. As a school director, as a school owner, as an entrepreneur, compliance is what we are seeking for, and compliance is what, of course, should be part of our DNA or our business DNA. So at this point in time, I'll invite any questions. If you have any questions or any query or any clarification, I'll give a few minutes to our attendees to you can raise your hand, you can type it in our chat box. Yes, we have one question. from John Wanyoike. John Wanyoike is asking, before we go, please kindly confirm if schools will be under the e-teams come January.
Absolutely, John. Everybody, including the farmer who sells milk to the local school, everybody will have to be on e-teams. It covers anybody who is in business. John.
Yeah. Thank you so much, John, for that question. Yes, yeah, everyone has to comply. Any other question? You can raise your hand. You can type it on your chat, in our chat box. It seems we don't have any. But above all, those are the contacts. Of course, what you're seeing on the screen is the contacts of Robert Wariru from each band tax and business advisory. We have one question. Jael is asking, repeat why you said schools and invoicing. Robert, I don't know what you meant. There's something you mentioned around the schools and invoicing.
Yes, Jael. So that was the example we were giving. So for example, let's say Ichiban Tax and Business Advisory is paying for my children's school fees, and they need an invoice for them to be able to pay. So the only way that the company or the firm will be able to take a deduction of that expense is if, Jael, you give me an e-teams compliant invoice. And that's the reason why we are saying everybody has to issue an e-teams compliant invoice. So, and that's just one example of where somebody is claiming the expense. But even if they're not claiming the expense, the law, Section 23A of the Tax Procedures Act, requires you to issue an invoice for all transactions because you're getting a payment. The way you issue a receipt when somebody has paid school fees. So you're actually required to issue an e-teams invoice for that. Then, okay, so Ben is saying, please review number 1 to 6 in the screen to allow me to screenshot. I missed. No, Ben, you don't even need to screenshot. We'll share this with Betty, and Betty can circulate the presentation to everybody. Betty?
Yeah, Ben, of course, we'll share this, and the same will also be available the recordings will be available in our YouTube channel too. So, but we'll of course share the presentation. I don't think, is there any other question? You're welcome, Ben. Much welcome. I don't know whether we have any other last questions before we end our meeting. It seems there's none. Yes, okay, it seems there's none. However, if you'd like to contact Robert directly, those are his contacts. That is his email address. You can always reach to each band tax and business advisory also through us as Ed Partners Africa. We'll be glad and very happy to just link you with them in case of any advisory or even consultancy in matters supposed to do with tax and KRA audit. So today, of course, marks our last webinar on tax, on matters taxation. And I hope you've learned so much and you've acquired so much knowledge that will help you run your schools, of course, efficiently, and also ensuring that you're compliant to what the government requires of us as entrepreneurs, as school directors in matters to do with taxation and also KRA audits. For any further query or any further question, do not hesitate to reach out to us as Ed Partners Africa through your relationship manager, through our customer care line, our social media pages, and even direct emails to us, of course, in a sector in line with the social impact, or rather a sector that supports matters to do with capacity building. We are more than glad to always work with you. We are more than glad to always see you in our webinars, and we are hoping come next year, we'll also continue coming up with new topics informed in what to do with how you will operate your school or even run your schools. Without any further ado, I want to say that this is the festive season. We want to wish you Merry Christmas and a Happy New Year come 2024. See you, of course, next year on same time or same place, or even in our other upcoming webinars for 2024. We'll be having very, very amazing programs for you as our school directors. But we'll also have our last webinar on fee collection. Please ensure that you attend and share the link with other people within the education community. And above it all, we want to let you know, as Ed Partners, we are here to transform generation, we are here to promote quality of education, and we are here to walk this journey with you. Above it all, I just want to wish you a good weekend and a happy Friday too. Once again, thank you so much.
Thank you, everybody. Enjoy your weekend and Merry Christmas.
Thank you so much, Robert. Bye.